So we're going to speak with Ashraf now. Ashraf has been looking at currencies for decades. He has an interesting view on the euro, which I'd like to tease out of him, and he also has a counterpoint with how the dollar and gold have moved in sync very recently and how that has parallels to the past. So we'll speak to him about that too.
We're even looking at dollar yen, which is basically the relationship with yields broke a little bit. Yields were pushing higher. Dollar yen was falling because, well, basically there was this normalization, anticipation by the bond markets trying to send yields higher, and gold fell because basically real yields, global bond yields minus inflation, was pushing higher because inflation was weaker. But that doesn't need necessarily to continue to happen in order for the dollar to continue to weaken. So it's a relative play. And here's the thing, even if Draghi says, he uses the word brutal, let's say, a lot of people are saying that he's going to delay signaling a tightening or curtailing liquidity because the euro is pushing faster than what he thinks. But it's not at 130, it's not at 125. It is at 117, and what's important is that the Eurozone does a lot of trade intra-Eurozone, does not really rely on a cheap currency as the rest of the country. So I think the Canadian dollar, which is really a great accomplishment, has been able to diverge away from weakening oil, weakening energy, and it's pushing higher. The big question mark is, will further rate hikes, will it really break the bubble, the real estate bubble in Vancouver and in Toronto? And the question is, Paulos knows what he's doing. He learned a lot, with Mark Carney, and I don't think he's going to be in a hurry to do anything. But I do think that going back to the euro story, which is very important, some people may say, well, look, you talk about the dollar index, why does it have to go to 82? It's mainly euro pushing up. What about the sterling? There are some challenges out there with the sterling. So the sterling has a smaller share of this dollar index. I think probably 134, 135, we could see 134, 135, but then when the real negotiations happen with Brexit, Theresa May is no longer saying no deal is better than a bad deal. But I think these things are going to catch up with the fundamentals later on. And I think dollar yen, we do think that we're going to drop back towards 104 and 103.